HCW Biologics, ticker HCWB, has quickly become one of the hottest microcap biotech stocks on the market this week. On Monday, the stock delivered a staggering 60% rally, climbing from the mid-$3 range to over $7 a share at its intraday high. Most traders expected that kind of explosive move to fizzle just as quickly as it appeared. But Tuesday brought something unexpected. Rather than giving up those gains, HCWB stock actually added another 6% in follow-through trading. For a tiny company with a market capitalization hovering around $10 to $12 million, that kind of back-to-back strength is not something you see every day. It raises the big question: is this just a short-term momentum trade, or is there more to the story that makes HCWB a stock worth watching beyond this week? To understand why this stock is on the move, we have to revisit Monday's catalyst. The company announced a new development in its TRBC platform, a next-generation immunotherapy that fuses pembrolizumab, better known by its brand name Keytruda, with a TGF-beta neutralizing component. For those who follow biotech, Keytruda is one of the most successful checkpoint inhibitor drugs in cancer treatment. The innovation from HCW Biologics aims to overcome one of the toughest hurdles in oncology, the immunosuppressive tumor microenvironment that often prevents T cells from doing their job. In early preclinical models, their fusion therapeutic outperformed pembrolizumab alone, showing enhanced tumor suppression and stronger immune activation. It's only preclinical, but that's the kind of news that can light up a microcap stock, and clearly, it did. Monday's rally made sense in that context. The company had a headline breakthrough, traders jumped in, and volume exploded. We saw nearly 87 million shares trade hands compared to an average of just 130,000. That's not just an increase, that's a market frenzy. But what makes Tuesday's 6% follow-up so interesting is that it shows the story didn't die overnight. Momentum carried through, which suggests more traders are watching, and perhaps some investors are starting to think there's more to this than just a one-day pump. For short-term traders, this is the dream setup. You've got volatility, liquidity, and a stock that has already proven it can move dramatically in either direction. That creates opportunities for day traders and swing traders who thrive on momentum. The risk, of course, is that sharp profit-taking can come at any moment. Microcap stocks like this don't always have the depth to support sustained rallies. But when the volume is there, as we've seen these past two sessions, the potential for outsized short-term returns is undeniable. The key for traders is to respect the volatility and manage risk carefully. HCWB is not the type of stock where you set it and forget it. It's the type you trade with tight stops, clear entry and exit points, and an awareness that things can turn on a dime. From a longer-term perspective, though, it's important to separate hype from substance. HCW Biologics is a clinical-stage biotech company. Their pipeline is still early, with most candidates in preclinical stages. The financial picture is fragile. In the most recent quarter, revenue collapsed from $600,000 a year ago to just $6,000. Losses narrowed somewhat thanks to cost-cutting and a $5 million equity raise earlier this year, but they remain unprofitable, with negative margins and ongoing cash burn. Dilution is always a risk for companies like this, and HCW has leaned on capital raises to extend its runway. That's the reality check. But the long-term bull case rests on the science. If HCWB can translate its preclinical results into human trials, particularly in cancers with high unmet need like pancreatic and ovarian, the upside could be significant. Even moving into phase 1 trials would be a major milestone, potentially attracting institutional interest or licensing partnerships. The TRBC platform isn't just about one drug candidate either. The company is also exploring treatments for autoimmune conditions and other immune-related disorders. That pipeline diversification matters, though again, it's all very early stage. So why does the stock deserve attention this week? Because we're watching an unusual combination of factors play out. You've got a microcap company making a legitimate scientific announcement, triggering a massive price surge. You've got follow-through momentum, with another 6% gain the next day, which suggests the trade has legs. And you've got a market environment where biotech speculation has been heating up, adding fuel to the fire. All of this makes HCWB a fascinating case study in how news, science, and speculation collide in the stock market. Another element to keep in mind is insider behavior. Earlier this year, HCWB saw significant insider buying, with executives including the CEO and CFO purchasing shares in the open market. That sent a strong signal that management believes in the company's future. While insider buying doesn't guarantee success, it does suggest confidence from those closest to the business. When you combine that with this week's news and price action, it's easy to see why traders and speculative investors are paying attention. Still, we can't ignore the risks. The stock is under Nasdaq compliance monitoring through mid-2026, meaning any slip-up in filings or minimum price requirements could cause trouble. The company's tiny size also makes it vulnerable to sharp dilution if management decides to raise more cash while the stock is hot. And without real revenue growth or late-stage clinical programs, the valuation is built almost entirely on hope. That doesn't mean it can't work out, it just means this is not the kind of stock for risk-averse investors. So where does HCWB go from here? In the short term, all eyes are on whether momentum carries through the rest of the week. If volume stays elevated and the stock holds above the recent lows, we could see another push higher. Traders will be watching closely for continuation patterns and potential breakouts. In the longer term, the focus shifts to clinical milestones. Will the company move its TRBC fusion therapeutic into human trials? Will it secure partnerships or licensing deals to help fund development? These are the questions that will determine whether HCWB is remembered as a short-lived momentum play or as a legitimate biotech success story. For now, it's fair to say HCWB is both. It's a short-term trading stock, with momentum and volatility that make it a prime candidate for active traders. And it's also a longer-term biotech bet, where the promise of immunotherapy innovation creates the possibility of exponential upside, but also the reality of high risk. That balance is what makes it a stock to watch this week, and potentially in the weeks ahead. So as you watch HCWB stock in the coming sessions, remember this: the momentum is real, the science is intriguing, but the risks are high. Whether you're a short-term trader chasing volatility or a long-term investor betting on biotech breakthroughs, know what you're getting into. HCWB has already proven it can deliver fireworks. The question now is whether this rally is just the opening act or the whole show.